Turning our attention now to the ASX, here's Matt Birney and Bulls and Bears with the latest public company views and interviews.
Welcome to Bulls and Bears, brought to you today by Magnetite Mines, ASX code MGT. I'm Matt Birney and I'm joined now by the Technical Director of Magnetite Mines, Mark Eames. Hi Mark.
G'day Matt.
Magnetite Mines owns the Razorback Magnetite Iron Ore project about 240 kilometres northeast of Adelaide in the Braemar terrain that is well known for its iron ore geology. The region has been producing iron ore for the best part of the last century. The company has just completed a pre-feasibility over the project, which already boasts a massive resource of some 4 billion tonnes of iron ore in ground, enough to see it churn out iron ore well into the future. Firstly, Mark, you've recently announced your maiden reserve for the project. What was it, and what grade of concentrate are you aiming to produce after upgrading your magnetite?
We've got a maiden reserve of 472 million tonnes, which is based on a 30-year mine life. That's a recovery of about 15%, but most importantly, the grade of our product will be between 67.5% and 68.5% iron compared to a reference level of 62%.
Getting almost close to pure iron. Look, magnetite deposits can be a little more challenging to get off the ground than hematite projects. The key challenges often involve the availability of infrastructure, metallurgy, the orientation of the ore body, etc. How does your project stack up against these challenges?
We've got three key advantages. Firstly, Razorback outcrops, and so over the mine life we've got a very low strip ratio of 0.16 tonnes of waste per tonne of ore. Secondly, we have very clean metallurgy, so we can produce a very clean, high-grade concentrate with magnetic separation. And finally, we're well blessed with infrastructure, particularly power, rail, and most importantly, low-cost electricity from the Southeast Australian grid.
Let's get into some rapid-fire questions on your recent financial pre-feasibility study. What's the expected initial mine life?
20 to 30 years.
And how much will it cost you to build?
Between 570 and 670 million dollars Australian.
What's the expected payback period on that capital or the internal rate of return?
At long run prices, between 5 and 6 years payback.
And what's the expected annual production? And importantly, at what grade do you think you'll produce at?
Targeted production level is towards 3 million tonnes, and it'll be a grade of approximately 68% Fe.
And what will it cost you to produce a tonne of 62% iron ore? And how much have you modelled up that you might be able to sell it for?
Break-even reference price is $54 for the 62%. That's our cost.
That's US dollars?
That's US dollars delivered to China.
What have you modelled up in terms of sale price per tonne?
We've used a long-run price of $110 a tonne for the 62%.
And most importantly, how much free cash do you expect to spit out a year over the life of mine on average?
About $140 million after tax.
Mark Eames from Magnetite Mines, thanks for joining me on Bulls and Bears today. And remember, we're only here to give you information, not advice, which you should of course seek independently. I'm Matt Birney and this is Bulls and Bears.
For more public company CEO interviews, go to the Money page at 6pr.com.au and click the Public Companies tab.